Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for a wild, just totally wild, trading day on Thursday, the 10th of October, 2019. I say wild. I think a 600-point range in the Dow is huge. When I look at this market, you have in the NASDAQ a 216-point range. Take a look at the size of the range in the S&P. It's, 70 points? Those are big numbers. Any way you cut it, and we still don't know where we're at. We think the president is saying via things are going well, but we've heard that so many times. We've heard Lawrence Kudlow say it's going great, and then everybody goes home with no deal. I don't know what tomorrow's going to hold. I know that as of tonight, the president's on a plane to, Minnesota. He is campaigning. There's no deal that's been announced. The Chinese have gone back to wherever they're going to huddle and talk and dinner. U.S. negotiators have gone home, and we're left wondering, what do we have? And if we have the first phase of a deal, what is that phase? And how important is that phase, and how does the market react to it? The one thing that I think would be financially very bullish is the removal, forget the word suspension, the removal of tariffs on China. That opens the door to many, many things. It's probably a big catalyst for the market. A suspension is like, well, I'm going to trust you for a little bit. Where are we going with it? But the stock market was good. In fact, at the end of the day, you were up another 80 points from this in the Dow. I was looking at the last trades. You were up much higher, maybe another 8-9 points in the S&P. As you can see, gold did not react well, which you'd assume. If you're going to have a trade deal and you're buying gold because you don't think there's going to be a trade problem, there's the depressed part of the market. Yet copper, Dr. Copper, as I like to call it, came alive and had a full nickel rally. Can this all flip on a dime tomorrow? You betcha. This is dangerous. You had a good rally in the crude. Crude, we also saw OPEC spokesman, the head of OPEC, come out and say that in December, OPEC is going to judge again and decide are further adjustments needed to the marketplace. There you go. They're cleaning the boards behind me. So as we look at the chart, the market is still underneath the 18-week moving average, so the bias is down. And with the huge rally today, and it was big, you're still down 10 points for the week. When we take a look at the chart action, you've got resistance all through here in this market. But today's action was important. Why? Well, you can see you had a spike here. You've got another spike in the market. So what we have is, if we can take out 29.59.50, in other words, until we do, you still have the pattern of lower highs. Maybe you're going to have higher lows. You're in a pause right here. It makes all the sense. Where do you think the resistance in this market is? I think we've labeled one level up here, but where are the moving averages? I want you to look at the 18-day average. That number tonight is going to drop on you. And it's going to get very close to where we finished today. You can see it's dropping about 4 points a day. That's going to put it around 29.54. We finished 29.41 with the high at 29.54. So a couple of things can happen here. You get over 29.59.50, you're going to have a pattern of higher lows, higher highs at that point. The bias will turn up at least intraday when that happens, because you'll be over the 18-day average of closes. What do the bears want to happen? They don't want to see this market do that. That's what I think they're saying. What else has been happening? Look at how often we've been hitting that 100-day average. So if you didn't know that there was this trade talk going on and you didn't know what this chart is, you'd be saying just don't get over that 29.59.50 zone. What about Bollinger Bands? Well, I think I don't know how to be clearer than I am. When you hit a Bollinger Band the first time, that's where I think the pros take money off the table. You look at today, you look at the low, and I think you did it, okay? I mean, you're within 0.4. 0.4, not a point, not a full tick in the market. And the market had a reversal, and now the question is, what does the market do next? I don't know. I don't want to call the trade talk. I don't want to sit here and tell you that I have any idea what that means if they have a deal. Let them tell us. Momentum up, bias down, trend still down, and a reversal day that until you take out today's low, the market's gone into a pause to the downside and might do more than that. Take out today's low and you create another trap. The problem is that's right where the Bollinger Band is. So I don't have a downside target then other than the 200-day moving average of closes. In the NASDAQ, you went right back to the 18-day average, and with all the craziness today, and that's a pretty big range, the market stalled at that number. In fact, it closed slightly under it at 77.60. Now, the last high was 77.99.75. The bears were noticing that and intraday halting that rally. But just like in the S&P, you have an outside day up, take that out, and suddenly what happens is you've got higher lows, higher highs over that number late in the week. That's going to be interesting for our weekly review tomorrow. In the Dow, where did you go? You tell me where this lower Bollinger Band and that 200-day averages. You don't have to agree with my thinking on the market, but going into a report, I think the shorts did a heck of a lot of covering there. And now we're just going to see where we go next. Take out 26,615, you negate the downtrend. But you already have the Bollinger Band, if you will, and the 200-day average right at this support level. Now we're going to find out. No, the trend didn't turn yet. We have to get through tomorrow. I consider major reports events like this, and what I tell people often is why go through them? It's so hard to beat the algorithm traders. In the Russell 2000, the market made a new spike low for the move, had a big reversal up. Is that the end of this decline? It well could market. Look at how far you've declined, and if the market gets up and over today's high, that becomes a new trade bottom. It negated the downtrend. You've broken the pattern of lower highs, lower lows for the first time since, folks, all the way up here in September. That's a heck of a break this market has had, 140 points. In the VIX, if the market breaks down, two levels of support, 1694, 1622, and no. I don't think that the pros will try to sell the upper Bollinger Band trying to get back to a key moving average here. I think they're in a hold mode waiting to see what this whole deal is going to present. In the bonds, where's the line in the sand, the neutral number? It's the 18-day average. You're right back to it as the market's waiting to see what tomorrow presents, and we are not trending. You have a lower and low, higher high pattern. Momentum lost its embedded reading. It lost the reading yesterday. You can see that. The goal, get back to the nearest key moving average, which in this case is the 18, and see what's next. That's what I think the market did. 10-year note, same thing. It didn't have the, or did it? I don't think it did embed, if I'm right. Let's see, it did yesterday. 1, 2, yeah, we had 3 days in a row. So you lost it, as you can see today, and you went right back. Did you hit it? Missed it by a tick. You probably can challenge that again. But where's the trend? This one's different. You could have lower highs, lower lows, and any close under 130.18. It actually turns the trend down, bias, rather momentum's down. That would give you the bias. You're putting into play the possibility that if the market extends the decline of the 100-day average and the combination of the lower Bollinger Band is a potential support zone. Battleground, 18-day average of closes. We then get to TLT. It did not break its uptrend yet. It's got to take out 141.14. Today's low 141.73, but the bias is down. You have higher lows, higher highs. The bias turned down, so the swing line is neutralized, that momentum, for a bit, and momentum is lost. Now, when you lost the embedded reading right back here, the play was, could you get back to the 18-day average? Let me get over here and I show you. Yesterday on the close, you lost that. Tip off that if you can't get it back right away, problems. The market never even tried to get it back. It just basically gapped and went to the downside. Dollar index, take out the 78.30 level, And all of a sudden, you get a new pattern. Lower highs, lower lows. The bias is already down, and momentum's down. That changes the trend of the market. Real important day tomorrow, as the euro has flipped to the upside in bullishness. It's got the higher lows, higher highs. Now, think of the logic here. A trade deal with China benefits the U.S. or Europe more? Europe more. And the reason is, if China gets on its feet, Europe is an export-based economy. We're more of a consumer-based economy. So what does that do? That could be the fire engine that gets this market going. Maybe you're talking again, the upper Bollinger Band. In the pound, late in the day, we heard word there might be a breakthrough on the Brexit. I give up on that. But you got to the Bollinger Band this week, and I think the pros got out of any shorts. And now this rally doesn't surprise me in any manner, but it's not a trend. You got a lower and low, higher high. First resistance, if you clear the 18-day average, which it did, is here. Where's support on the break? Back at the 18-day average. If the market extends, the Bollinger Band 126 is the next resistance. In the end, you don't need a safe haven if you have a trade deal, and so the market breaking down on it could be the lower Bollinger Band coming in. Trend down, bias down, momentum down, resistance, 93.42. I'm going to repeat what I said. All of this counts on what the reaction on trade is with the U.S. and China. Your guess is as good as anybody else in the room. In Bitcoin, difference. I say that you broke the downtrend when you took out this high right here over in this area, and maybe the 18-day average is where the market wants to regroup itself. Take the name off the chart, that would be very, very typical in this market. You're correcting an oversold condition. In Brent versus WTI crude, well, you're still over that 18-day average of closes, which still gives Brent the bid over the crude. If we look at the markets in the December crude oil, and this is, by the way, the Brent oil. I should put up there Brent so that we see that. You made a low today of 57.11 that is under this low. So you have a lower low, a higher high, a mess of a chart. You've lost the, you're oversold and you're trying to correct. You never did embed. I shouldn't have said that. Resistance pretty strong at 60.45 to 61.20. If we come to the WTI crude, I knew I was doing these and I didn't write that right. Lower low, higher high. And by the way, on this one, I should have an arrow here pointing up there and one down there. I'm just noticing I did that wrong. Gasoline. We were talking yesterday. What does this market do? This is yesterday's action, not today. You're oversold, higher lows, higher high. Resistance starts at the 100-day average up to the 18. You tell me what you're doing. You're right into that number. And last, in that gas, still in a bearish condition, even with all this cold weather. I'm suspect of that. But we keep getting builds in the natural gas stocks. We see it each day, and that's weighing on the market. Until you lose the embedded reading, I say the bears are aggressive on the short side. We have a pretty good idea of where the resistance comes in now at 259, the combination of the 18-day average and the 100, and you had a bearish crossover to the downside as the 18-day average went under that. You know, I do this all without memory. I'm just looking at the charts as we talk. One of the things we try to offer is research. That's what differentiates our firm, Linn Associates, from a lot of other firms. We write all day for commodity traders, news, research articles, a lot of information. For those of you that love price counts, think of price counts as a combination of where a market might go as a Fibonacci count with steroids of swing lines in its own way. And we cover all these markets. If you haven't seen our research, you should. If you haven't seen our trade platforms that have these technical indicators, you should. How do you try it? Well, if you haven't tried it, let us tell you how to do that. You go to our website at www.iraepstein.com. You're going to see the word free trial offer. Click on it, sign up from there. You can always call us. We do pick up the phones during the day. Or you can click up here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow. I'm going home for a good night's sleep. Take care.